All right, sorry, good afternoon and good morning or good evening, wherever it is you're listening to us from. We want to quickly just apologize for for starting just some minutes behind schedule. I mean, sorry for the inconveniences. We are back and we are live now, so we're going to get to it right away. This is Real Estate Today, the webinar organized by Ubosi LA and Company. It's a monthly webinar that is being organized by the firm. And so right now, we're going to be having the November edition of the webinar. So you're welcome. We want to welcome everyone who have joined and those who are also going to be joining. We want you to tell your friends, to tell other people to join immediately, that we are live and we're about starting right away and immediately. This morning, we're going to be having topic that we're going to be discussing on. But before we go into the topic that we're going to be discussing, I want to also say that some of the things that we need to know, there will be opportunity for you to ask your question. Howbeit, you can ask your question using the question and answer chat box to drop in your question while the webinar is ongoing. If you so desire to also ask question and you want to speak live, we'll have the privilege to promote a few persons to ask the question live. So please just let's take note of this these rules and these things that you need to know before we start right away. So this morning, or this afternoon rather, depending on where you're watching us from or listening to us from, we're going to be speaking on the topic understanding tax implications for your real estate transactions. Understanding tax implications for your real estate transactions. And there's no other person who is going to be doing justice to this topic other than the principal partner of Ubosi and Company. We're going to be bringing right away right now Mr. Chudi Ubosi, who is going to be speaking to us about understanding tax implications for your real estate transaction. Good morning, sir. Good afternoon, sorry. You're welcome, sir.
Good afternoon, everyone. And thank you for joining us on this edition of our real estate webinar. Thank you, Sanjay, for that introduction. The topic that we'll be treating today, or the topic I'll be speaking on today, is understanding the tax implications for your real estate transactions. But before I start, let me apologize for the late start. We're starting about 10 minutes behind schedule. We had a technical issue. About 5 minutes before, I think we had our adverts already running and all the tests had been done. And about 5 minutes before we're supposed to start, the system froze. So please accept my very sincere apologies. It's not in our culture, it's not in our nature. We are a firm that deal very, very strictly with time. And part of our service that we offer is timeliness. Thank you. And as I go into the topic, understanding tax implications for your real estate transactions, the first thing I would like to say is, except you're not a Nigerian, many of us would have by now realized that the government at various stages, at every level, at the federal level, at the state level, at the local government levels, are struggling very hard to provide services. And in an era where the government revenue is falling at every point, the federal, the state, and the local government level, one of the sources that the governments always fall back on to show up their revenue is property taxation. So a few years ago, governments that were not serious about taxation, about property taxation, are aggressively turning to taxation. And many of us would notice their agents at all levels are out on the streets seeking to enforce and collect all manner of taxes related to real estate and real estate transactions. Real estate in itself, real estate transactions involve leasing, involve buying, involve selling of assets. And for those of us who are in the consultancy industry, we also pay taxes on real estate transactions. Maybe before I go on, I would like to say that taxes are something that have been there. Even if you go into the Bible, you will see somewhere in the Bible where it said that the king sent his agents out to go and collect taxes because he needed to provide services to the people. So taxes are something that many of you cannot necessarily be avoided. But in this particular edition of our webinar, I want to talk about real estate taxes. Many of us, and many individuals, are not even aware of the existence of these taxes, and more importantly, the liabilities involved, especially when we engage in real estate transactions. Many of us are not aware of the taxes and the liability. The liability is a function of who is supposed to pay these taxes when we engage in real estate transactions. It is so important that these things are known. Now that taxes and property taxes are becoming more and more imperative, more and more important to the government, and there's a lot of effort at every level to collect them. It's important that as stakeholders, as operators in the industry, that we know what these taxes are. Because many times when we engage in transactions, without knowing it, these taxes add up to a tidy sum, impacting the transaction, impacting the buyer, maybe impacting the seller, impacting the leasee or the lessor. It just depends on what aspect that one is dealing with. So it's very important that we're knowledgeable about these taxes to avoid running into trouble with the tax authorities or having legal issues post a real estate transaction, or even just find out that at the end of the day, you're not even able to conclude your transaction successfully by way of maybe obtaining some kind of consent or whatever, because the taxes that you're supposed to pay are so heavy and you didn't know about these taxes from the start. So before I go into this, I'm just going to say we're going to look at the various kinds of taxes, real estate taxes that are obtainable in the industry. We're going to look at the various kinds of taxes that are obtainable in the industry. Many of us already know them. We've talked about some of these taxes before as a means for government to increase their revenue. But today I'm focused not just on, I'm focused on these taxes more to determine the question of liability and how we as stakeholders, as a buyer, as a seller, as a leasee or a lessor can deal with them. So I'm going to look at, in the next few minutes, the various taxes that are applicable to real estate transactions. The first one is the land use charge, which is one that many of us know. In Lagos State, this land use charge has started. It's the land use charge law of 2020 of Lagos State. And the land use charge in Lagos State, it's a combination of a lot of the ground rent, the tenement rates, and so many other small things, even things like radio license and so on, are subsumed into the land use charge. And it was started off by the Lagos State government several years ago. Now most states are copying it, and many of them have enacted new laws within their states to give teeth to enforcement and able to collect these land use charge. Calculation is based on the capital value of the property, and then what is called a rate nairage. It's a percentage is applied to the capital value, and you will then arrive at what would be the land use charge. Lagos State, for example, where we're speaking from, allows for concession. So if the owner of the property is owner occupied, there's a different rate nairage. If you're a retiree or a pensioner, there's a different rate nairage. And I think there are concessions for religious use, there are concessions for one or two other uses, the commercial use and so on. There are all kinds of different rates. But the rate nairage definitely differs from case to case. Can I have the next slide, please? The rate NIRIC differs from case to case, from situation to situation, and circumstance to circumstance. For a lot of people who don't, who have issues with the land use charge, it's always very important to speak to a professional who will advise or guide you on it. Can we have the next slide, please? Who will advise or guide on it to ensure that at the end of the day, you pay the proper rates. Because we're talking about more of the liability today, one of the things I'm going to say is that according to Section 6 of the Land Use Charge 2020 of Lagos State, the owner of the property is liable to pay the land use charge. Section 6 of the Land Use Charge Law of Lagos State 2020 indicates very clearly that the liability of land use charge falls upon the owner. I want you to note that because we're going to come back to it much later in our seminar, in our webinar. Now, the second thing, the next one is the withholding tax. The next slide, please. The next one is the withholding tax. With the Section 68, subsection 1 of the Personal Income Law Tax, the Personal Income Tax Law of 1993 stipulates that when a rent becomes due or payable to a person, the payer of that rent shall, at the date when the rent is paid or credited, whichever occurs first, shall deduct therefrom tax, the withholding tax, and pay over to the relevant authority the amount deducted. Now, the withholding tax is a sum that is supposedly withheld. So for a rent, the withholding tax is withheld. The man who is going to pay the rent takes 5%, withholds 5% of that tax, of that rent, sorry, and pays it over to the government. So the definition of rent in this instance covers payments for the use or hire of equipment, movable or immovable property, and real estate comes under that category. Real estate is immovable property, so it's classified under that category. And when you pay rent on real estate, then you would have to pay withholding tax. Now, many people don't know this, but the withholding tax rate differs if you're a resident or non-resident. If you're a resident in Nigeria, there's a withholding tax of about 5%. If you're non-resident, it can go as much as 10%. Even for corporate and non-corporate, the withholding tax differs between 5 and 10%. We'll go to the stamp duty, which is the third tax. The stamp duty is covered under Cap 441 of the laws of the Federal Republic of Nigeria. Cap 441 of the laws of the Federal Republic of Nigeria covers the payment of stamp duty, and it's tax collected on every real estate related document or agreement to authenticate and ensure their validity, and also just to be able to show that indeed this document or this transaction has been brought before the government. So examples of property-related documents on which stamp duties are paid will include tenancy agreements, certificates of occupancy, land agreement, lease and sublease agreements, a lot of different deeds here and there, powers of attorney, deeds of mortgage, deeds of assignment, and so on. The stamp duty, for many who do not know, unfortunately, I forgot I was going to put a copy of a stamp duty document. Those purple things are red you see at the top of a document. When you hold a document, there's stamps, and you see those red stamps. They're different. The original one has maybe 4, 5, 6 stamps evidencing the full amount of the stamp duty paid. And then the photocopy, the copies, not the photocopies, the copies thereafter have smaller, maybe 50 naira stamp duty paid on the copies. For a lot of documentation, the value of the stamp duty is assessed at 0.05%. The next one is the consent fees, something that many of us in the real estate industry and for those who have done real estate transactions are used to. And let me tell you where consent fees came out of. The Land Use Act, Section 22 of the Land Use Act, enjoins a holder of a statutory right of occupancy to first, just mark that word, to first obtain governor's consent before alienating his right of occupancy or part of it. Alienation in this wise could be mortgages, could be sales, could be assignments, could be giving someone a power of attorney or whatever. Section 22 says that the holder of that right of occupancy should first go and obtain consent from the governor of the state. Remember that the land use decree indicates that every land in every state is held in trust by the governor of that state. So before you can sell, before you can mortgage your property, before you can assign a part of it, you must obtain what is called the consent from the governor. But these days, it's done in reverse, and again, we'll talk about that later on. Fees, the consent fees vary from state to state. Some states charge as high as 10%. Some states go to 5%. I think I was reading something yesterday, in one of the northern states, about 9%. Lagos State looks at charges about 1.5% of the assessed value. Registration fees are usually paid, the fifth tax, registration fees are usually paid on instruments presented to the land registry for title registration. The process of registration ascertains that the property is given a title number that makes it traceable and then guarantees that it is documented in the register of titles. Registration fees usually about 0.05% of the assessed value of the property. Registration fees, for those who do real estate, registration fees enable you have a number. So if you want to do a search, if you want to undertake a search of a particular title document, you would see on the back page, it says this property is registered as number 22, page 22, in volume 202 in the land registry at Lagos. It can be page 30, volume 30, page number 30, page 30 in volume 350 at the land registry in Lagos or Abeokuta or Kaduna, as the case may be. But that registration fee, it's where you pay it, that's where you get the registration number that I just called. And many of us who are familiar with title documents would remember that you see those things at the back of the title documents, and sometimes, and for the C of O's, they are sometimes also, many times also written in the front page. The capital gains tax, which is the sixth tax I'm going to talk about this morning, is a tax levied on capital gains made on the sale or disposal of chargeable assets, including real estate, and it's covered by Cap 354 of the laws of Nigeria. Capital gains stands at about 10% of the gains made on real estate transactions or disposals. Let me tell you how the capital gains tax may operate. So I buy a property today at 10 naira, and 3 years later, I'm selling it off at 50 naira. I have made a capital gain of 40 naira. And so I've made a capital gain of 40 naira. And so I'm supposed to pay tax on that 40 naira. The capital gains tax today stands at 10% according to the law. So I'm supposed to pay 10% of that 40 naira as my tax to the government. The value-added tax, this one is something that most professionals pay. Also, when you buy building materials, when you're involved in construction and so on, there's a value-added tax that is payable to the government for those transactions. And it is rated, the current rate of the value of VAT is 7.5%. The Value-Added Tax Act is, sorry, the Value-Added Tax Act is 2004. It was an act made in 2004. Estate duty taxes, it's interesting to know that as of today, there are really no laws guiding the operations of estate duty payments, but most state governments charge between 5% and 10% of assessed value of the estate to give approval for the operation of the diseased estate. So you have somebody who is deceased, he dies intestate, or he dies with a will, and so on. For you to gain access to operating his estate, the law allows you to be appointed as administrators. For you to be appointed as an administrator, you pay estate duties. The estate is valued. You pay a percentage of the assessed value, 5%, 10%. In Lagos State, I think it's about 10%. You pay about 10% of the value of the estate to the government as tax, and then they give you the authority to operate the estate of the deceased. So these are the various kinds of taxes that are recognized with real estate transactions. We've talked about 8 different taxes, but I'm now going into the questions of liability. When we started, I reminded us that the governments are getting very aggressive in terms of collecting their taxes. They're all over the place. So these days, people are sometimes even given tax liabilities that might not even be their responsibility. And there's pressure on them to pay. And so one of the major questions that we get asked as professionals, and we generate a lot of arguments and controversy, is usually who bears the liability for many of these taxes. Who bears the liability for many of these taxes? We would see tenants who come back to us and say, look, why am I the one paying these taxes? Why am I the one paying land use charge? Why am I the one paying registration or stamp duties and so on? For many of the basic taxes like estate duties, I talked about that estate duties was one of the last taxes I talked about. It's simple to determine because then you're dealing with a family. So it's the family that just goes and says, look, we want to regularize the deceased estate. So we want to pay our taxes, want you to assess the estate, and want to pay the taxes to enable us have the authority to deal with it. So many times there's not a problem regarding who should pay estate taxes. The same thing when you're dealing with some of the public sector issues. If you're dealing with consent in the ministry, some of these taxes are embedded in the dealings or the transactions with the public sector. Things, taxes like stamp duties, registration fees, and so on. Even the capital gains tax is embedded. In a state like Lagos State, you're just given straight up, you're just given a letter that states all these things, totals them up, and then you're given the different account numbers and the different headings and so on to pay. But for a few others, there can be a lot of back and forth in terms of arguments as regards whose liability it is. And I'm going to take the land use charge as one of the ones that we constantly have questions thrown at us regarding whose liability it is or whose responsibility it is. When I started off, when I talked about the land use charge earlier on, I said Section 6 of the Land Use Act 2020 of Lagos State indicates very clearly that the responsibility for paying land use charge is that of the landlord, is that of the property owner. But many of us in practice will find out that many times the landlords try to pass it off to the tenants. And that's where we have this argument as per, is it really legal? Why should I pay it? And so on. From a practitioner's perspective, the key thing is usually documentation. And that's why I have put here, I said, yes, whether it is legal for a landlord to ask you to pay the land use charge, I have put it there. I said, yes, it is. And I'm going to qualify that. Many times, these taxes are put in the letter of offer. Assuming I'm trying to sell a property to a client, I'm trying to give him a letter of offer for a property that he wants to lease. A letter of offer is made to the client. And in that letter of offer, if you read it very carefully, you would see where it will be put net of all taxes, net of all taxes. And that net of all taxes includes VAT, includes withholding tax, includes the land use charge, and so on and so forth. So the letter states very clearly that when I am letting this property to you, when we're transacting regarding this lease, whatever the landlord is getting, whatever monies you're paying, are net of all taxes. There are no deductions that will be made from it. And so when the draft or the lease agreement is done, it is put there that the tenant will be responsible for paying every tax that is levied on the property. This tax, and then there it will be spelled again very clearly to be put there as land use charge. So there will be withholding tax, there will be the VAT and VAT and so on. But what happens? What happens is that at the time many of these transactions are being concluded, very few tenants read the covenants in their letters of offer. They just look at what the rent is, and yes, the rent agrees with the rent harmonizes with what was agreed. They look at the terms of payment. So we're going to pay 2 years rent or 3 years rent up front, or we're going to defer the second year's rent. Once they see some of those clauses that have been agreed up front, they're very happy to go ahead and pay. But then the controversies begin to arise when 6 months down the road, 1 year down the road, there is a bill sent to you for land use charge. And going from by Lagos State, your land use charge can be something like 120,000. And then the tenant begins to ask, why should I be paying it? But hey, you're paying it because it was agreed. It was agreed and it was put in your lease agreement, which you signed, and so on. And why should I be paying for it? You're paying it because it was agreed in your letter of offer. It's there in the lease agreement, which was signed. Many times, like I said, people don't take time. People don't take time to read and understand the covenants and the clauses in the lease agreements, in their letters of offers, and the implications of those clauses, the implications of those covenants, especially the financial implications of those clauses and covenants when they're taking a lease. The same thing applies to when the same thing applies because once this thing is put in the contract, in the lease agreement, as part of the tenant's responsibility, and the contract is signed, it's difficult to renege on it because it's expected that you would have read your lease agreement or your contract and understood the covenants and would be ready to abide by them. So it's difficult for them then as a tenant to renege on it. And that's why today we're talking about who takes the liability. It can actually be the landlord. The law states clearly. So before you take a lease, before you go into a lease contract, you can decide that, look, I don't want to be responsible for the ground rent, for the tenement rate. For the land use charge. And this can cause the landlord to say, okay, so we build this into the rent, or I will decide that I'll take care of it. It becomes my responsibility. But this is why at the end of the day, we encourage tenants or leases and leases, please just read your contract, understand the covenants, be sure that your lawyer explains each, or your lawyer or estate agent or estate valuer explains each and every one of these covenants to you. And if there are questions that you're not clear about, take time to understand, take time to ask and understand those questions. Let me go quickly to the next one, the stamp duty tax. When leases are concluded, there's a provision for legal fees, many times charged at 10% of the gross rent passing. The stamp duty law allows that sometimes the document will not necessarily stamped if the lease is less than 3 years. But beyond 3 years, it is mandatory that the documents be stamp duty. Again, you can avoid it. We say avoid it, or whatever. You can avoid it if you are sure that you are not going to go to litigation. You are not going to have any problem with the tenant. But once there's a need to go to court, to go to litigation, then the document needs to be stamp duty. Many times you find out that it is the point at which this document needs to be tendered in court. Sometimes 4 years, 5 years, 6 years, 7 years late, that the issue of stamp duty then comes up. At that point in time, the government is charging you for stamp duties at the current rate and then asking you to pay a penalty for not stamp dutying the documents 7, 8, 10 years ago when the transaction was consummated. Now, sometimes there's also this argument, why am I the one paying stamp duties? Find out. All we would say here is find out when you deal with the legal people or with your estate agents, what does the 10% legal fee I'm paying, what does it cover? It's important that these conversations are had and there's clarity on both sides, on the side of the tenant, on the side of the landlord, and their various professionals. That way, the issues of liability as per who should pay and who shouldn't pay are dealt with very quickly. The consent fee. I talked about Section 21 of the Land Use Act says very clearly that the vendor must obtain consent before alienation of his real estate transaction. These days, we know that this is not the practice. The practice is after the transaction has been concluded, then the purchaser goes to the governor to obtain consent to the transaction. And I'll take that again. Section 21 of the Land Use Act states very clearly that the vendor, the owner of the right of occupancy, must obtain consent from the governor before alienation of his interest in a real estate holding. But today, for every stakeholder, for every practitioner, and those involved in the industry, we know that the practice is post-conclusion of the transaction with the vendor. Then it goes to the governor for consent. And many times, just like the letters of offer I talked about when it comes to leasing a property, the letter of offer is usually very clear that the purchaser will be responsible for obtaining consent to the transaction. The purchaser will be responsible for obtaining consent to the transaction. And that consent to the transaction comes with tax liabilities, the consent fee, the stamp duty, the registration fee, the capital gains tax, and so on. All these come as the responsibility of the purchaser. And this is not what the law says, but it's simple. It's very easy to see why today the liability of the consent fee is on the purchaser. Because once the letter of offer is made to you that your transaction is met, is the responsibility of obtaining consent to your transaction is that of the purchaser, which is the man buying. You know straight away that as soon as you finish that transaction, the vendor is taking his money and he's walking away. He signs over his deeds of assignment to you, hands over his original documents and every other document that you need. The Form 1C, the deeds of assignment, and so on, hands them over to you and walks away. He is not going to come back and try to get consent on your behalf because he sold the property. So these days, it's very easy to see why, at the end of the day, when it comes to consent, the liability is on the buyer, even though this is against the grain of Section 6 of the land, of Section 21 of the Land Use Act of 1978. So letters of offers are done, and this is why at the end of when I started, I talked about the buyers must be very careful, purchasers must be very careful, and must factor into their purchase the total cost of obtaining consent. These things must be factored into their purchase, the total cost of obtaining consent. And in Lagos and many other, for a lot of states in Nigeria, we'll find out that people don't generally go and obtain consent to their transaction unless it is imperative. People don't bother. People just buy a property, collect their deeds of assignment, take possession, and once they're in possession, they have their documents. Many just hold on to it until it becomes imperative. Statistics that we have done, research will easily tell you that less than 30% of transactions that are undertaken ever end up on the governor's table seeking transactions. So for every 10 transactions that are done, 7 never get to the governor's table. And that's because at the end of the day, people don't want to go through the trouble. They don't want to pay the consent fee and the taxes that are involved in those transactions in obtaining the governor's consent to the transaction. So that is what deals with consent fee. The last one is the capital gains tax. It's not too different from the consent fee. Like I said, the capital gains tax is embedded in the consent fee payment. So it's about 10% of the assessed value of the property. It's embedded in the fees that will be paid as consent fees. So you have the registration fee, you have the stamp duty, you have the capital gains tax, and then you have the consent fee, and sometimes the VAT, which is made payable to the federal government account, especially if you're in Lagos. So that's it with capital gains tax. And as I conclude, I just want to say that the responsibility to pay tax is one that we must all embrace. No society can grow without it. I'm not making a case for the tax authorities, but yes, it's a responsibility that many of us must constantly embrace and know that, yes, we must do it. But property tax is one area where many Nigerians still have not imbibed the culture of pay. When you look at the level of adherence or the level of, that's the word I'm looking for. When you look at the number of people who are paying the land use charge in Lagos, you know that they're still struggling. Lagos State still struggles. There's a lot of enforcement going on. The level of compliance, I was looking for that. What I was looking for was that of compliance. The level of compliance by actually individuals. Many of the states are still struggling. Many don't even have the facilities and the resources to go after these the people who are liable to pay these charges. 3 or 4 weeks ago, the Minister of Housing, the Minister of Lands and Housing came on air to say that, look, those who are owing government, all the federal government properties and hadn't paid their ground rents, in years that they stood a chance of losing their properties if they didn't pay their ground rents in the next 60 days. But interestingly, someone had to remind the governor that even the staff don't ask. Nobody is asking, nobody's engaging the owners of these properties. Nobody's engaging them and saying, look, where is your ground rent? Where is your ground rent? Nobody's engaging them. So his threat or whatever is just what it is. Yes, a few people will go and pay, but the truth about it is that except people who heard that announcement, many are not going to be bothered. The government doesn't have the resources, the human resource, the technology, and so on, to be able to enforce the payment of these ground rents. And so a lot of times they are lost. They are just lost in the system. And for many of us, again, you'll be shocked at how low some of these rents are. Some of the ground rents in places like Ikoyi and so on, payable to the federal government at that level are less than 10,000 naira per annum. In this day and time, these are figures that can easily be paid if the government interfaced and sent out demand notices to the occupiers or the owners of this property. As I round up, as regards liability, it's important that as every one of us undertakes the diligence or due diligence for our real estate transactions, it's important that the tax liabilities are factored in and provision possibly made for the payment of these tax liabilities. And when I talked about the lease agreements and contracts of sale, please let's ensure that every time we're involved in these transactions, we read and understand the covenants and the clauses of those court documents and be sure that obligations that are not our obligations are not made part of the things that we will end up paying. I thank you for listening, and we will take any questions, and I'll try and give as many answers as I can. Thank you once again for attending this month's edition of our real estate webinar. Thank you.
Thank you so very much, Mr. Chudi. Thank you for that that real detail, well, I call it detailed in terms of explaining into details with regards to the various taxes in terms of property tax that we have here in Nigeria, and with particular emphasis a bit on Lagos and all that. Thank you so very much once again. Before we have, there are a few talking points that I would want us to have before we take, again, I think a few persons have been putting questions. We encourage you to please keep putting the question in the chat box, and we're going to come back to those questions. And again, should you also want to ask directly from Mr. Chudi, want to speak directly or make one or two contributions, you definitely will be allowed to do that, you know, so I mean, you'll be allowed to do that. So please let the questions keep coming in. Thank you once again all for listening in. Okay, so sir, let's start by when you were wrapping up, you talked about, in one of the conclusions, you talked about the responsibility to pay taxes, one that we must all embrace. And you talked about that no society can actually grow without paying this tax. Okay, maybe this is not an ethical question, but what argument will you have for or against in terms of saying, because most questions people will ask and say, okay, what's even the essence of paying this tax? We're talking about tax and tax and tax and tax and all that. What exactly would the government be doing with its tax? So what we're speaking with people who we should be encouraging based on this conclusion that you have in terms of ethical questions, rather. How do we make this argument for the government or as against the government with regards to essence of paying this tax? It is compulsory for us to pay, but I want you to weigh in on that for people who are having the questions to say, why must I even pay this tax in the first place? We're talking about tax and tax. What exactly are the government doing with this money?
Thank you, Mr. Senor. It's simple. No society can grow without tax. I'm not going to belabor the issue. No society can grow without tax. And like I said, if you read the Bible, I think it's in Luke chapter 2 or so, you would see that even as far back as the olden days, there were taxes being paid. No society grows without tax because government needs the tax to provide services, provide infrastructure, to provide security, and ensure that we have an orderly society. So it behoves on every one of us to pay these taxes. And it's not just about paying these taxes, it's also about the responsibility of ensuring that those who manage the taxes have accountability and have integrity behind them. That's all part of our responsibility. It's not enough to pay, but it's also part of our responsibility to ensure that there is that. Thank you.
All right, thank you very much, sir. So let's now talk about property tax reforms, for example. You've reeled out so many taxes that has to do with property and all that. Again, recently, if you also look at what the government is trying to do, I know there's a bill talking about harmonizing tax and all that we have too many taxes. And maybe that's also one of the reasons why there's no transparency or why people are not really paying, or the government is not doing as much as they should do. So in terms of reform, we can say, would you consider that this property tax reform are unpopular? And now, if they are unpopular, does it mean that the government, you also mentioned it anyway, but I also want to weigh in more on it. You talked about when the minister talked about tax payment, and you're saying, do they even have the resources for it? So the question I'm asking now is that, how can the government now, how can the government itself begin to communicate the benefits of these taxes so that they can get more people on board? Because I think the more people who pay tax, the better it is for the government and for what it is, for what we can do with the money. But now in terms of the tax net, maybe we have only a few persons who are probably paying or probably who don't want to pay. So how would you advise the government to communicate? Sir? Okay, are you with me, sir? Okay.
I'm with you.
Okay, so I'm saying, how can the government now begin to communicate the benefits of this tax payment? And do you think we actually need tax reform?
It's not, yes, I think the first thing you have talked about tax reforms, because there's currently a bill in the National Assembly. Interestingly, I think today is the final reading and it's going to be voted on it today. There's currently a bill in the National Assembly today, which is going to be voted upon. There are a lot of tax reforms coming on the way. VAT is going to be reformed and so on. Personal income taxes are going to be reformed. Corporate taxes are going to be reformed. It will all trickle down, even down to real estate taxes. These reforms need to be done. The reason why I would say there are a lot of non-compliance, as you mentioned, is that there are a lot of taxes. Speaking, I attended a seminar sometime earlier on this year, where the special advisor of taxation to the president was talking about the number of taxes in one particular state. In one particular state, there were 180 taxes that were paid, that were supposed to be paid by corporates and individuals operating businesses in that state. For my office, for Ubosi and Co, for example, and I'm sure you know this, every year when we renew the papers for our cars to be able to operate within Lagos and out of Lagos, we pay nearly 45 different taxes at that level. So there has to be a harmonization of these taxes. And the only way the government can get full compliance is by harmonizing these taxes and reducing them to what is manageable. And that once that is done, the rest of it is trying to ensure that people can see what they're using their taxes for. And I think from there, we should be good. Thank you.
All right, thank you, sir. One more thing from this angle before we now begin to delve into the questions. You also mentioned about taking you back to the issue of technology and resources, where you talked about the government not having enough technology or resources to even demand for these taxes or even go after people to get these taxes. So the question will be, in terms of technology deployment, what would you advise? I mean, we're talking about Lagos now. We're not talking about other states who probably are not even doing as much as maybe Lagos State is doing. In terms of technology, would you think that there's a need to invest seriously in ensuring that we capture a lot of more people in trying to bring them into this tax net, technology and resources, basically?
Can you take that again, please?
Okay, so I was saying that you referred to, when you were wrapping up, you referred to technology and resources. You refer to technology and resources in terms of the government not having enough technology to even capture these taxes. So I'm saying that what would you think that the government should be doing in terms of deploying more into technology for tax collection, for example?
First of all, let me say that the tax collection thing in Nigeria, I'm not even sure technology comes in play right now. I'm not even sure that technology comes in play. The first thing is the government needs to capture a lot more people in terms of technology, in terms of taxing. They need to widen the tax net. They need to widen the tax net. When that tax net is widened, you'll be amazed at how much comes in. It's easier to get a lot more money when you have widened your, it's like a pyramid scheme. At the bottom, you can collect 100 naira from 10 million people, and you'll have so much more money than looking for that singular one person where you're going to collect 100 million from, and you're battling with him. So for me, I think the first thing is actually to widen the tax net. The second thing I would say would be a lot more public education, educating the public on why these taxes need to be paid, educating the public on what these taxes are going to be used for. In this country, people cannot see any correlation between their taxes and the services that they get from the government. So I pay my taxes, I get out to the streets, it's filled with potholes, my sewage is not cleared, my refuse is not taken away. At the slightest rain, my home is flooded because the drainages are blocked, and the government who should open those drainages are not opening them because my tax money is not being used. So there should be a lot more public education as to why these taxes should be paid. And that would include a lot more, it's not really at the elitist level. It's really at the base level, the market women, the middle level people. Lagos State is doing a lot. So the point is that many of the other states need to actually buy this thing. And then when you talk about technology, yes, technology then comes in when you need technology to count homes, to determine easily how many homes you have on Obafemi Awolowo, for example. Technology will tell you with ease how many properties you have on Obafemi Awolowo. Technology will tell you with ease how many people live in those properties. Technology will tell you with ease the types of properties that are there. So with that kind of the government really eventually would deal with a lot of technology, because that will be able to tell them how much they can levy on most of the homes, and also makes collection very easy, and also makes it easy for them to determine who has not paid, and so on. So yeah, I think that for me answers the question.
All right, thank you, sir. So let's go to the questions that we have. I'm aware there's somebody who I can see, Olalekan Babawale, has his hands raised. So at the back end, please, I want you to promote him. I'm going to call you to speak. Just give me a couple of moments. And Abayomi Animation, please just mute yourself. You're going to be asked to speak later on. Let's look at the questions that we have here, and I'm sure you can also see them. Okay, so the first question is from Akinraku Abraham. He said, thank you for the webinar. He said, kindly share with us the cost implication of taxes in real estate transaction, how these taxes impacted overall real estate value. How should we treat this tax 16 valuation? Thank you. Did you get that, sir?
Yeah, I see the question. Let me take that. It
Okay,
says, kindly share us the cost implication of taxes in real estate transactions and how these taxes impact overall real estate value. In terms of the taxes, I've spoken about them. I was talking about stamp duties, consent fees, the land use charge, the value added, capital gains. How do they impact real estate transactions? If you buy a property and you buy a value for about 10 naira, you probably will end up paying to Lagos State, for example, as much as 11, 12 naira, sorry, as another additional 2 naira, 3 naira before you get your consent and that property is regularized as your property. Now, what that also means is that by the time this is all done, one of the first impacts is that it increases the value of the property. That's the first thing. It just means straight away that if you're going to put that property back in the market, you're going to put that property in the market with, added to it, the cost of obtaining consent. So really, it raises real estate. It raises it raises the overall value. And how should these values be treated in transactions, in valuations, in asset valuations? You must very clearly state, in property valuations, you must clearly state what these taxes are. We have, when we're doing our valuations, this is now technical because we have a lot of non-valuers on this score, but when you're doing your asset valuations and you are deducting tax, when you're looking at outgoings, from your rent, for example, you're looking at outgoings. The outgoings would include all these kind of charges. The land use charge is an outgoing. You look at your maintenance costs and so on. These are, by the time you deduct all this, these one way or the other either help bring down the value of the property when you capitalize your rent and so on. But one way or the other, in our valuations in Nigeria, and we must be very frank about it, in our valuations in Nigeria, the cost of outgoings and these taxes are very negligible. The truth is that they are negligible and sometimes do not really impact the values of properties when we do asset valuations. I hope that answers Mr. Akinroko's question. I can't hear you, I can't hear you, Sandra. I think you're...
Okay. Oh, thank you. I actually muted. Okay, so the second question is from Bola Gidado, is saying, how is the withholding tax calculated?
How is withholding tax calculated? Withholding tax is 0.05% of the rent to be paid. Withholding tax is 5%. According to the law, is 5% of the rent payable. So if you're paying, if your rent is 1 million, 5% of that tax should be immediately held back and paid to the government as a withholding tax.
All right, thank you. So before we go back to the other questions, can Olalekan Babawale, can you unmute yourself and please ask your question or make your comment? Olalekan Babawale, just unmute yourself. I can see you have been promoted. Do you want to unmute yourself and ask your question? Are you there? Okay, I don't think it's ready for us. Okay, so let's go to the other question. There's this other question from, of course, Bola Gidado also. It says on the WHT, does the tenant deduct from rent paid and forward to the tax authorities, or the landlord/agent add this on top of the rent to forward to the authorities? Can you see that question, sir?
Yes, I can see it. It's let me answer that immediately. It's part of what I talked about in the last bits of my presentation when I talked about liability for these taxes. Now, who pays these taxes? I said very clearly that when the letter of offer is made, usually it is very clearly stated there, net of withholding tax, net of all taxes. So it is expected that when the final payments are going to be made, so your rent is 1 million, 5% of that rent is 50,000. So we will now add 50,000 to the 1 million. VAT is 7.5%. We will now add 75,000 to that. So by the time you're paying your rent, in total, you'll be paying about 1.150 or 1.250. And so when these monies are received, the estate agent or the landlord can now take it and pay to the relevant authorities. Or an agreement can be reached with the tenant and says, look, make the payment within 30 days, make the payment within 60 days, and forward to us a copy of the receipt. The key thing is that the payment is made. When that payment is made, it's receipted by the relevant authority, and the landlord gets a copy of it and keeps it for his own records in case questions are asked down the road.
All right. Thank you very much, sir. So let's quickly, I can see Mr. Bayomi Animoshaun. Please, can you unmute yourself and make your comment or contribution or ask your question? Mr. Bayomi, you have the floor. Just unmute yourself and ask your question. Thank you.
All right. Good afternoon. Can you hear me now, please?
Oh, very well. We can hear you, sir. Yes.
All right. I'm grateful for all the insights. And this is my first time joining. I just want to chip in something which I feel resonated with me while I was listening to Chudi. It's in the aspect of most of these things we experience as property consultants, property managers. I guess we can independently sponsor bills that would help position real estate consultants from suffering in issues of where property owners or prospective clients think they are doing you a favor when it comes to paying your agency. In other climes, you have bills where you go that become laws, where if you go against them, just like the taxation now, if the government is coming to collect tax from this sector, the government should also back us up with laws that will enable us easily make money to pay this tax, either the landlord, the tenants, or who we also are landlords and tenants in different spheres. So what I'm proposing, sir, to your experience, to your wealth of connection and all, when do we have to wait for lawmakers only to sponsor bills for sectors like real estate? What can we do together to sponsor bills specifically about fees, payments, and execution? Thank you.
Thank you, Mr. Animashaun. You know, I agree with you. One of the biggest problems of professionals in this country, and it's not just us as estate surveyors, it's professionals generally, is that the work that we do is never regarded as anything. Professional work is looked upon as nothing serious. So very few professionals are actually remunerated properly. And when I mean properly, according to the scale of their professional fees. You know as well as I do that in this day and time, very few people would pay you scale fees. Anything you want to do is negotiated from the beginning. And many times you turn down these briefs because you think that the fee is not worth it. So clearly, yes, we indeed can sponsor a bill. We can sponsor a bill, but I want to say something to you. Don't wait for somebody to do it. You have identified a problem. Why don't you take the lead and rally a critical set of people around you? And let's take the lead and let us now be the ones that will present this bill to the National Assembly. And let's see how far it goes. There must always be somebody that takes responsibility for change in every society. If you're willing to take that responsibility, many of us are willing to run behind you and make sure that the bill goes through or even if it is changed or whatever. But yes, I assure you that when you have this problem, you're not the only one that suffers it. Virtually every other professional has that same issue, and many will be willing to join you in passing a bill that will change their situation and circumstances. Thank you very much.
Yeah, all right. Thank you, Mr. Bayemi, once again. So is Mr. Olalekan ready to make his comment? Can you unmute yourself? Or do we go to, if you're not ready, we can quickly go to the other. I think we have 3 more comments or 3 more questions to, okay, there's Bamidele Odunuga is asking, he says, good afternoon, sir. An educative webinar indeed. He says, my question is, how can we make it mandatory as an estate surveyor and valuer to imbibe what the law says about seeking the consent of the governor by the vendor before alienation of his or her property, so as to save the buyer of avoidable stress and extra cost of getting the governor's consent after purchase? You get that, sir?
Yes, I got that question. It's possible to, but it becomes a problem. And then, you know, since this is a practice, and this practice has held for over 46 years now, since 1978 or 1979, let me even say 1970, let's use 79 as a base here. Since the practice has held for over 45 years, it will be difficult for you to say, I want to sell my property. You now go to the governor and obtain the consent that many of us know. In Lagos, it could take you anything from 30 days to 1 year, depending on how fast and your documentation is. It's not impossible to do that. But why would we want to do it? Because at the end of the day, bottom line is, even if I obtain my consent first, that figure will be added to the final sale price of the property. And then in terms, we need to look at the practicality of obtaining this consent. It means that I already have a buyer. You know, the consent means that you're going to the governor with the name of your buyer. So before you are saying that the governor, that whoever it is should go and obtain consent, the vendor should obtain consent, it means that he has a buyer. Because that means that you are taking already prepared deeds and so on to the governor with the name of a buyer and figures and so on for him to sign. It's not very practical. It's not very practical in the light of what we know in practice. It's not also the nature of real estate transactions the world over. So maybe what my professional colleague should be asking is that clause be removed from the Land Use Act and made simply, rewarded simply, saying that when you transact on real estate transactions, the governor must give consent to it before it is then recognized as a completed transaction. Thank you.
All right, thank you, sir. I think I can see from the back end, can you bring Samuel Sabiu? I can see his hands raised. Can you bring him up? Whilst you hold on, I will take a few other questions before we call him Sabiu. I can see him raising his hand. Okay. Okay, there's also another question from Ugochi Beatrice. He says, please, what is the procedure for payment of these taxes? Which office handles it? And is there any computerized process that makes it convenient for consultant to calculate and send the payment with ease? You get that, sir?
Yes, I got the questions. Many of these taxes can be easily obtained. Once you're dealing with people in the land registry, for example, you will know exactly what you need to pay. Once you're dealing with the right people in the registry, they will be able to look at your documentation and calculate all these taxes for one. In terms of the other things like stamp duties and so, they will be able to do it. A lot of this just is actually speaking with the right professional. It's speaking with the right professional. Many times in the land registry, It's the same Lagos state government. There are various accounts that they pay these things. There's an account for stamp duty. There's an account for consent fee. There's an account for capital gains tax. There's an account for value-added tax, and so also an account for stamp duties and so on. So it's really about who you are dealing with. Don't just wake up in the morning, issue checks, and then start going to the bank to say you want to pay these things. As per the calculations, I can tell you that many times, I don't want to use the word that is subjective, but yes, again, it's important to liaise with the right officials in the public offices, and they will be able to guide you as to the sums to be paid and so on. Thank you.
All right, Mr. Sabiu, can you unmute yourself and make your comment? Mr. Sabiu.
All right. Good afternoon, sir.
Good afternoon.
Good afternoon, sir.
We can hear you. Good afternoon.
Yes, my name is Samuel Saibu from Abuja. Yes, this is my question.
Ahead, sir. Yes, go ahead, sir.
On a real estate, in a real estate that deals with only buy and selling of land, what are the taxes that are applicable?
Buying and selling of land, what are the tax things that are applicable? The same, I assure you that the same tax laws are, the same tax liabilities are, you need to pay consent fee when you're doing your transaction. For even bare land, you need to pay. In Abuja, you need to pay your ground rents and land use charge and so on. So the same laws, the same tax liabilities are applicable in Abuja. Did I answer your questions?
Yes, thank you.
Okay.
All right, thank you, Mr. Samuel. So we've got, I think, 2 more questions. One is from Bola Gidado. It says, as regards LUC, I think land use, okay, some landlords have come to say that the tax consists of ground rents, neighborhood improvement level, and tenement rate. They argue that only the ground rent component should be paid by landlord. How do we argue this? This question, sir.
Well, the argument is there, but the law supersedes the argument. The law has been made. So this is not the time to argue it anymore. The law has been made. The time to argue as per whether neighborhood improvement charges or tenement rates and so on was when the law was being made. Now the law has been made and all these taxes have been merged. Any debates at this point in time is purely academic. So let's leave the government, let's pay the land use charge and let them apportion it as they deem fit. They have a formula for apportioning the neighborhood improvement rates, the rates that go to ground rent and so on. They also, and as they collect this thing, they also have a formula for which they use them to do infrastructure, to do health, and so on and so forth. But I think right now, any conversations as per whether neighborhood improvement charges or whatever, it will be purely academic.
Okay, thank you very much. I think 2 more questions. Someone is asking from the chat box, Olani Kombabawale. He's saying, good afternoon, sir. He said, can you please be more explicit on 7.5% reduction as VAT on professional fees when what's required to be paid on professional is 5% withholding tax? But you are muted. Okay.
Yes, there is a 7 point. Professional fees are chargeable. There, you are bound to pay value-added tax on professional fees, and that's 7.5%. Withholding tax is on rent. Withholding tax is different from value-added tax. Professional fees are different. And for professional fees, it is 7.5%. It's totally different from withholding tax. So I don't think that, except our colleague is a bit confused, which he can then look at the laws again. But there are two different things. Withholding tax is on rent, professional fees, value-added tax is on professional fees.
All right, thank you very much, sir. Can we just squeeze in the last question? This last question is by an anonymous attendee saying about the withholding tax that has been said to be 5%. What about instances where 10% was deducted on rent and the withholding tax has been remitted to the appropriate authorities? Will there be any implication for this?
Let me understand. You had 10% deduction from the rent for withholding tax and paid over to the government. I imagine that you can put in your application for a refund. The simplest thing is to ask the government for a refund. That's the simplest thing, that you overpaid the withholding tax. Simply ask for a refund. It might take some time, but one thing I guarantee us is that these government agencies work. They might be slow, but if you put in your application and you have a proper case, I guarantee you that refund will come. Thank you.
All right, thank you very much, sir. I think that's about it for now. Thank you once again, Mr. Chudi, for doing justice to this. And we also want to thank everyone who had also attended this webinar. We spoke on understanding tax implications for your real estate transactions. And thank you very much, Mr. Chudi, once again for doing this with us. For everyone who had registered and dropped in your email addresses, you can be very certain that we're going to send in the slide for those who had actually asked questions about the slides. You're going to get the slides and we're going to do that. We'll also anticipate and expect your feedback. Should you have any, please do not hesitate to reach out to us. I mean, your concerns and your questions will be answered and we will definitely get back to you. On this note, I want to say a big thank you to you for sticking with us from the beginning of the year up to this very moment. We're not going to be having for the month of December, but January coming, and we're going to be starting again real estate webinar for the year 2025, and we look forward to seeing you in the year 2025. On this note, we want to say thank you once again for coming, and we pray that God bless you and do have a wonderful Christmas celebration as we see you next year in the year 2025, God's willing. We want to say this webinar has come to an end, and thank you for attending this webinar. God bless you all.